Yo, what's going on, YouTube fam? It's your boy, Stevenson Lindor. I'm back with another video. Like I said on my last video, I'm gonna try to drop one every single week. That's the goal. So I got more nuggets for you to share. As always, make sure you like, share, comment below. Um, spread awareness. Most importantly, definitely for anybody who's struggling out there, who's trying to gain more knowledge, more information. And of course, as always, disclaimer. All right, read the disclaimer below in the description box. Trading is and can be dangerous. All right. Past performance doesn't guarantee future profits. So make sure you know what you're doing before you jump in. All right. So let's get to it. I got another one for you. Today, we're going to be going over the higher time frames and how you can use it to your advantage, right? Daily, weekly, monthly. Um, and pretty much, I'm going to be talking about when you're looking at the daily and weekly, especially for higher probability sell setups, buy setups, most people don't realize the wicks on those higher time frames are your supply and demand zones on the smaller time frame. What, Steve? What are you talking about? All right, let's start with the basics. Boom. So, as you guys are all aware, right, you got two types of traders in the market. You got buyers, all right, and you got sellers, right? Now, buyers, as a buyer in the market, where are you trying to buy from? From the bottom, right? Buy low, sell high. That's the concept, right? Buyers, goal is to buy low. Sellers, the goal is to sell high. So think about this. Every time you're jumping in the market, ask yourself, are you really, when you're trying to look for that buy setup or that sell setup, are you really buying low? Are you really selling high? All right. So right now I'm on the weekly time frame. So if you think about it, if I wanted to catch this buy, the best time to buy would be from the bottom, right? Not really in between, anything like that. You really missed the move to really catch this. All right. And for all you traders out there, if you always wonder how certain traders are always getting wick entries on, higher time frames, this is how they do it, right? Because they understand these wicks off the daily, weekly, monthly, these wicks on these buyers and seller candles, that's where the entries are on the smaller time frame, right? So if I want to buy from the bottom. If I want to sell, I want to sell from the top of the bearish candle, right? And each bearish candle, right? When I'm in a down market, let's just say this down market right here, I'm going to sell at the top of that wick. Now, you can do it one or two ways. You can just add a horizontal line, right? So you know where price is heading once it gets up there, or you can mark up the entire thing, right? And when I say the entire thing, not the entire candle, not both the top of the wick and the bottom of the candle of the wick, no, right? So for bearish candlesticks, for sellers, you want the top, you want the, here, you want the top of the wick. There you go. Boom. See, right here, you wouldn't notice because it's just a wick based off the weekly. But if I was to go back in time, right? I go back here and now go on, let's say, the 4-hour time frame. That's a sell zone. That is a sell zone, right? This is a supply area. This is a supply area for when the market finally pulls back. This is where you would want to potentially look for a short opportunity. All right. Your entry is on the smaller time frames. All right. See that? So, of course, right, price came up. Got your change of character, got your pullback, got that, boom, right? So this is a supply zone right here. Back to that same spot. Now, again, if the market, all right, if the market when it pulls back, notice, look at this bullish candle. When it comes and pulls back into the supply zone, look how it reacts, right? So once again, come back over here, go down to, let's say, the 4-hour, 1-hour time frame. There we go. Boom, voila. Now, what's the sequence? Remember, the sequence for entry. Entry confirmation, right? Checklist, 1. I want to wait for a change of character. I want to make sure that price is about to reverse, all right? Technically, right now, price is in an uptrend. So once it gets into the zone, I'm going to need a change of character, giving me the first confirmation that this is in a reversal. Second thing I want is a retest. Right? I want to make sure that high is not going to get revisited and broken. All right. Third, I would like to see either 2 higher highs, not 23, but 2 higher highs or lower lows. Why is that? Because that confirms the trend. Right? 2 higher highs or 2 lower lows confirms the trend. So let's look. Right there. So you got your change of character right by this horizontal line. That's checkpoint 1. You got your retests, 2. And then you got a second lower low, 3. So now I feel real comfortable selling this entire setup, right? So now all I got to do is pretty much wait for another pullback before entering the market, right? And there's my move. And I was able to do all of that, right? All because I marked up my higher time frame. Now, again, you could technically do this on any time frame, all right? On any time frame. So, for example, on GCAD, right? So, see these bearish wicks right here? I wouldn't mark this up. Why? Because remember, this is a bearish candlestick. So if I'm looking for buyers, I'm looking for a buy candle, right? I want to see buy wicks. I'm on the 4-hour. So you see this right here? So it doesn't look much on the 4-hour, but again, if I go back, right? See how price came into this demand zone? Now watch this. It's for educational purpose. If I go down to like a 5-minute, see how this 5-minute came a demand zone? Got my POI, I got multiple imbalance candles, right? And again, for those who don't understand what an imbalance candle is, see the gap, see all that space between this candle and this candle? So between this candle and that candle, see all that space? That's an imbalance. That means the market must come back to fill that in, right? There was an imbalance. Because again, the market is made up of buyers and sellers. So when you have more buyers than sellers, especially when there's news involved or anything like that nature, right? When the big banks come into the market, they'll create huge institutional candles, big candles, right? You'll easily recognize them. A lot of times you guys will see them as engulfing candles, right? That's an imbalance right there, right? Imbalance. So the price will come back to fill that up, right? So those wicks are demand zone, just like these wicks of supply zone, right, off these bearish candlesticks are supply zones. Didn't get a lot of activity, but just to prove my point. So once again, if I go down to, let's say, a 15-minute time frame, what was that here? So I go down to a 5-minute time frame, 15-minute time frame. You'll notice that zone, that area, is a supply zone. Look at all those imbalance candles, right? Boom. So now when price comes in, remember, you didn't get a big move down, but still had a sell opportunity. Got your higher highs, higher lows, higher high, higher low, boom, break, retest, another break, another retest. And then you had a couple sell opportunities before this drop down. But my point is, when you use the higher time frame, especially the daily, the weekly, the monthly, right, you'll realize those wicks, those are the zones you want to focus on. So what's your point, Steve? What should I do with this information? What you should do with it is you should leverage it. Now you have no more confusion. So let's take a look at GCAD right now. Look where GCAD currently is. Look, notice this is this weekly's candle, right? It's starting to come down. What's to the left? Right? This bearish candle right here. So it's not surprising that price is about to fall, right? Overall, we're in a downtrend, right? We're in a downtrend. So I always advise, always, daily, weekly, monthly. I've been saying that for years. But now, go to your higher time frame first. At least start with the daily. Figure out your direction. Figure out if price is at a supply zone or demand zone. And once you figure that out, you just want to be in alignment with the market. So if I know I'm in an overall downtrend, right, until structure changes, it's in my better interest to just trade along with the market. So boom, I got this sell zone. See, when I come down, you can clearly see it. This is a POI candle, the supply zone. Now I come down even further. Now I'm looking, and as far as which time frame to trade on, because I always get asked, which time frame, Steve, which time frame? There is no special time frame, ladies and gentlemen. There's no holy grail of time frame. It's a matter of what do you prefer? What works best for you? All right? Keep in mind, if you jump all the way down to the 1 minute, right? 1 minute is every 60 seconds. So just because you see the sequence on the 1 minute, basically a change of character, retest, all that stuff like that, doesn't mean the market's going to take off right away. You could have the sequence just off right here, and then the market pull back. And then it does it again, and then the market pulls back. So what I'm saying is you might do that a few times if you're trading on the 1 minute time frame, right? 5 minute, same thing. 15 minutes, you see where I'm going with this? So the higher the time frame, you want to be careful and cautious of how far down you want to go. If I'm operating, especially off the daily or weekly, 15, 1 hour, those are like my sweet spot. I might go down to the 5 minute. I'll only use the 1 minute if I'm analyzing just off like the 1 hour or 4 hour. All right. Those are my recommendations, but you can play it however you want just to prove my point. All right. Because people swear there's just like this magical time frame where all of this stuff happens. So watch right over here. I'm going to zoom all the way back because no way 1 minute is going to let me go all the way back from that 1 hour. I'm going to go down to the 1 minute and you guys can see, right? So 1 minute. Perfect example. There's my higher high. There's my change of character, right? There's my multiple lows. Perfect. Price pulls back. Let's say I get in here for a sell. But as you know, what? Price is going to pull back. Right? There you go. So you have to keep that in mind. If you're going to trade on a time frame like the 1 minute, there's a possibility that you might get taken out and you're going to have to jump in to trade again All right. I want you guys all to understand that. So that's why I stated, especially if I'm like on the hour or weekly and I'm looking for an entry, 1 hour, 15 minute, those are like my sweet spots. All right. So perfect. Once price gets into the zone, guys, at this point, I'm checking off my list. All right. Higher highs, higher lows, higher highs, higher lows, right? I'm waiting for that change, that shift. Boom. We got it. Got the shift. First pullback, second, right? And remember, every leg that breaks structure now, that's the leg you want to focus on when price pulls back. And notice when this pulled back right here, just this move, right? So let me erase all of this. Just this move right here. I want to focus on that. See, this was the leg that broke structure. All right, so your POI candles here, this is the last bullish for this bearish move. But remember, I'm looking for a sell. So I want to highlight the top of the wicks of that sell. Because remember, if I'm selling, I want to sell as high as possible. So now when price pushes up, voila, to the top of that wick. And at that point, you wait for bearish activity or you just jump in, right? The moment it touches, put an entry order in, and then just make sure your stop loss is a little above previous high or whatever. So you have that wiggle room. And then there's your move to the downside. Right? And again, you would have caught 180 pips off of this, which is absolutely wonderful. But as you can see, price pulled back, and then you would have to start the whole process over again. But just by understanding, hey, if I'm looking to sell, that means I need a bearish candle off the higher time frame, and I need to be selling off the wicks. So that means if price pulls back to that level, that's where I want to watch for my buy or sell, right? That's where I want to watch for my buy or sell. Just like this up move right here. See this uptrend? Right, this bullish uptrend. So you see all the bullish wicks hanging off the back of these daily candles? Those are demand zones on the smaller time frame. Look at this. Look at that. Voila. So when I go down to like a 15 minute to go look for my entry, at that point, it's over. Let me just do the 1 hour. So notice all these spots. These are your demand zones. So now when price comes here, again, what do I do, Steve? I just follow my rules. I just follow my rules. Price came down. I get my change of character. Got my higher highs, right? Boom. All right. There was your first break. I did it over here. There's your change of character. You can get on the pullback. That first pullback, you absolutely can. But if you want a more high probability, wait for 2 higher highs or 2 lower lows. So I got my 2 higher highs. Perfect. So on the next pullback, and you can always line it up with your MACD, as you can see. When it pulls back, and it goes red, notice it's not lower than this low. All I got to do, look left. And how you guys would always look for the POIs. I would always tell you, look for the POIs, all that stuff. Guys, let's pull back. Now look, bullish candle. Still by the POI. So now you just focus because you're buying. So I want to focus on the bullish candles that got the wicks. And this is my ideal entry area. After that, there's your move to the upside, right? This week, UCAD, very good trade setup. So when I look at UCAD, overall, had a downtrend, right? Just pretty much going to a downtrend, heading into a demand zone. See that? So I'm on the daily. See this wick right here? Demand zone. Perfect. But I'm in a downtrend. So that means all these bearish wicks right here, I want you guys to focus on this. These wicks off these daily candles are zones on smaller time frames, right? Now, when I go down to a 1 hour, 15 minute, or whatever, as you can see, same thing. Remember I said on the last video, if you think about it, your pullbacks on a downtrend are your supply zones. Your pullbacks on an uptrend are your demand zones. So those wicks off the daily, weekly, monthly time frames, those are your main zones. Those are the main ones. You don't have to worry about this one. You don't have to worry about all the ones in between. I don't have to go down to the 5 minute and worry about all those little baby ones. I just got to worry about the main ones. Price pulls back, as you can see, 4 hour, look left, right? Notice how it came to the top of that bearish wick. The moment I could have done a couple things here. Wait till price closed below this bullish candle, start selling, or of course, wait for the sequence, right? Come up, change a character, pull back another, and then got all these opportunities to sell. So if I'm selling, I'm looking at the wick. So right here, boom, see the top there, at top of the wick, voila. Right. One more example, gold. So when I look at gold right now. On the weekly, boom. So I know price is about to reverse. Somewhere around here, it's going to reverse. I look at the smaller time frame, it's setting up. Divergence, everything, sell coming. As always, be patient. So yes, I looked at gold, start the week, right? I got the break of this high, so we're in an uptrend. Okay, cool. Right, we're in an uptrend. Notice this was Monday. This was Monday's daily bearish candle. But if you look left, because we confirmed we're in an uptrend, we're going up. We still got room to go up. When you look left, what do you have there? A bullish daily candle. So again, concept is to buy low. So that wick is your demand zone. So watch this. When I go down to a smaller time frame, what do you know? There's your demand zone, POI. There's your imbalance candles. Everything you need to know. Nice correction. Price tapped. And then obviously you just go down to the smaller time frame, probably 1 minute, just to show you guys. So 1 minute. See, lower low, lower low, lower low, lower low, and lower high. So I'm on a break for a retest, right? Pull back. And then there's your move. Could have got an entry here, another entry here. Notice once that broke, once you get that change of correction, change of character, and then those two higher highs or lower lows, pretty much good. Pull back, boom, and then there's your move to the upside. All right, we know where price is going. You don't got to watch that whole thing. You guys get my point. All right. So Once again, quick recap. Daily, weekly, monthly, the wicks off those candles. So if I'm looking to buy the bottom wicks of the bullish candles, that's where I want to place and watch for my buys. The top wicks of the bearish candles, even right here. You see this big bearish candle right here? Even though we're not in a downtrend, but that wick right there, right? Just having that wick right there. Just having that wick right there. So now when I go down to the smaller time frames, voila, supply zone, perfect. Pulls back, perfect. See, even on this imbalance candle right here, bearish. See the top of that wick? Look where price comes to. And that would be your entry. It doesn't get easier than this, ladies and gentlemen. All right, so hopefully you enjoyed this video. I wanted to make it simple, easy, and quick. I don't want to make it too long. Study, guys. At the end of the day, it doesn't matter how many videos I drop, all your favorite traders on YouTube, whatever academy you're a part of. If you're not putting in the work, you're not studying, you're not back testing, none of this matters. None of it matters. All right. As you guys know, I got a challenge going on. If you're still interested in joining, please shoot me an email, guys. There should be more of you involved. Some of you guys, you know what's funny? I'm getting like emails of people. I'll send them the directions. They'll read the directions. Oh, the date is cut off. Maybe I'll come again next time. Excuse me, I'm in charge. I can allow and accept whoever I want. I'm the cutoff time. Don't worry about the date. I'm the cutoff time. All right. We got about 62 people in here, and the challenge is more than just flipping accounts, guys. It's actually giving you a chance to be in a Telegram in an environment where you get to learn, right? I got all these people posting charts and learning, and they're actually being grateful and they're happy now because now they're finally getting that attention that they've always wanted, the education that they always wanted, right? I've dropped a few videos. We get on webinars. We look at the market. So now they have a better perspective, right? Shout out to my guy, Ivan over here, just joined. Just join, followed, boom, got in this trade set up, looking good, everything like that, guys. You want access, shoot me an email, let me know. Don't worry about the cutoff date. I am the cutoff date, all right? And we can help you with your, with your trading journey, all right? So, as always, guys, hopefully you got some value out of this video. Please like, share, comment, subscribe. Make sure you subscribe. Get it out to your friends, your family, your loved one, anybody who's interested in trading and just trying to elevate their game. As always, I'm always gonna, come out with a video and have you look at it from a different perspective. All right. Maybe some of you guys just caught an aha moment, and now that's gonna help you take your trading game to the next level. So I appreciate you. Love you. Take care. Stay blessed. I'll see you all on the next video. All right. Your boy is out once again. We in there. See you on the other side.